Today, I just want to kick off something with you, being able to just talk about anything related in the real estate market. From your vantage point as a lender, and from my vantage point as boots on the ground as a real estate agent, really out here networking and working with buyers, sellers, and investors on any transaction that they're thinking about doing. And I know a lot of people have questions that go unanswered because they don't know who to talk to, who to reach out to. So I'm going to have a platform where we can talk about real life things, what's going on in the market today, what we're experiencing in our own retrospective fields, those that are looking to either purchase or sell their homes, what they should look out for, what are some things that we will be looking for, and how they can go about getting assistance throughout that process.
Absolutely. I appreciate you allowing me to be a part of.
Before we get started, you can tell about yourself, who you are, and the name of your company, what it is that you do.
My name is Edward Foy with the Home Equity Network, also known as H Mortgage. I am a mortgage broker owner. I've been doing mortgages in some capacity or another since 2003. Started my company back in 2006. Specialize in all aspects of financing for real estate, specifically 1 to 4 family units, but also commercial and non-QM. Commercial is apartment complexes, churches, storefront, retail space. Non-QM would be bank statement loans, P&L, basically outside the box financing options.
Yeah, so that it kind of touches anybody that's trying to do some type of real estate transaction.
Yes, we try to be somewhat of a one-stop shop. Being a broker, we have the ability to shop with hundreds of different lenders. So as opposed to going to, let's say, a Chase Bank or Bank of America or a retail lender, they can only offer you the products that they have. Whereas being a broker, we have the ability to shop with multiple lenders through that one application.
That's about what Eddie does. If you're trying to purchase a home, then he'll go into more detail about what it is required if you're looking to purchase a home. I want to get into today's market in the greater Houston area and things that you are seeing in your business that will be beneficial to know. How does one come prepared to buy? What are some things that they should be refraining from doing so they make sure that they're in line to buy? And kind of programs that you may have that are top of mind, that are beneficial, and what you've been using mostly throughout the last couple of months, the last quarter, with everything going on in our economy. Today, in the city of Houston, average sales price of about $450,000, a median sales price of about $346,000, close to $350,000. The median is on par of what it was year over year last year, but the average sales price has gone up. And I believe what I've been seeing when I'm looking at the market is I see a lot more homes that are higher in price than what they were a year ago being sold. So there's a larger quantity of those. And what I mean is, like, say for last year, the highest price home or the average price home was like $430,000. That means a larger pool, maybe a percentage of the homes being sold, 30% were more expensive houses and or the luxury market, which definitely drives or skews those numbers, anything $1 million plus, as opposed to anything that's 300 or less. Then of course you're going to have a higher sales price.
Right.
I've been seeing the luxury market as of June 2025 had a big boom. A lot of people were buying luxury houses, right? And I think when you're in that ball game or you're in that price point, things are a little bit different about how people are financing things. Mm-hmm. And a lot of those folks, in my experience, haven't necessarily been just so keen on the interest rate. It's been a factor, but they have ways of being able to take care of what that financial barrier of getting into the home is, because they got a lot of cash to put down, or some people pay outright, all cash, whatever the case may be. But that luxury market has been on the uptick, whereas so much inventory is in town right now of $300,000, $400,000, $500,000 houses that people are just going to go pick wherever they want. And the interest rates for the last couple of quarters have been a little bit higher. So those haven't been moving as much. What would you say you've been seeing with applications in your business?
There's a lot to unpack there. But I personally have had the same experience. The last couple of loans I closed were jumbo loans, that higher luxury market. And without even diving into the stats, I think that touches a very important point. Most people purchasing in a luxury market not only do they have the finances, as you mentioned, a lot of times they will also have the experience in owning multiple homes. When you get to that level of income and real estate portfolio, in many cases, these are people that understand that high or low interest rates, that over time, real estate is one of the most consistent investments that's going to bear fruit over time. And unlike any other investment I can think of, real estate is a need. It's like air and water. We need a roof over our head. A lot of times people fall into this trap of comparing the appreciation of real estate or a projected appreciation, or they see something on the news about recent flattening of the market and they say, oh, now is not a good time to buy. Well, did your need for shelter dissipate or disappear?
Right.
Because last I checked, we all need a roof over our head. And what does that mean? That over time, those prices are going to continuously go up. Show me a 5 or 10-year period in any market where we have seen a consistent drop. It doesn't exist, right? Even in the 2008 mortgage crisis, one might argue that that's one of the last snapshots over a 5 or 10-year term where we saw a drop. But even that, you go out another couple of years and you're going to see a spike in property values going up. So it over time, it's always going to rebound, and it's unlike any other investment, because not only is it a consistent appreciation, but it is a physical necessity. Most people in the luxury market understand that, and they say, you know what? Even if I've got to pay a 6 to 7.5% interest rate, I'm getting a great deal on this property. I could always refinance if and when the market improves. And if it doesn't, well, guess what? People they're still going to need a roof over their head. So it's going to appreciate in value. That also reminds me of another statistic where the average net worth of a homeowner versus someone that rents, I believe the stat was, 38 to 40% higher, right? So does just owning a home mean that you're going to have 40 times the net worth of someone who rents? Not necessarily, but there's something in there that's very meaningful that I think if more people gravitated to, they would see an improvement in their growth in wealth. You had also asked about what is needed or what you want to do to prepare, and with the turbulence of the market, etc. If you're a first-time home buyer, if this is the second or third home you're buying, you're looking to purchase investment property, there's many things you focus on, but I break it down to income, credit, and assets. Make sure that not only on paper can you afford the home that you're looking for, but there's many other expenses that people don't take into account. Like when somebody applies with me for a home, I don't know how much they're spending on groceries, right? I don't know how much their gym membership is. They should, though, right? So just understand that sometimes your DTI or debt to income ratio on paper might be within the qualifying parameters, but you might have outside expenses that are not being accounted for. So make sure that you are purchasing within your means, that your credit is in line, and at the same time, it's a fine line, right? So we want to make sure that we're putting our best foot forward, but don't let waiting to optimize your credit get in the way of your getting a good deal on real estate, right? So what I mean by that is you might only need a 580 credit score to qualify for an FHA loan. Would it be great to have a 720 or an 800 credit score? Sure. And we can work on getting you there. But if an opportunity presents itself, most options are going to be better than renting. So it goes back to what I said earlier. You can secure something, start building equity, and then maybe it's going to take you 6 months to a year, or possibly 2 years or more to build up your credit. And when you get there, we can always refinance and lower your interest rate, but you can't go back in time and get a lower purchase price on your home.
Right. So you kind of talk about preparation for the buyer, right? If you know you want to buy, it's a couple of things you want to just keep in mind, depending on the loan type, which we'll touch on that here in just a second. Depending on the loan type, having your mind what that down payment is. Okay, cool. Let's allocate funds for that so that you at least have that taken care of. And then, we work on trying to get closing cost expenses paid for. But it's always best to have both, if you can, to have a little bit more negotiation power. Having that plan is very important. Hey, I'm going to buy a house next year. I'm going to buy a house in the next 6 months. Okay, great. If I have a $300,000 house and I know I have to pay 3.5% down payment, that's $10,500 that I know I'm going to have to pay for. That's my skin in the game. So why not get prepared for it to say, hey, I at least have these reserves for me to pay for that. That way, when I'm having a discussion with a lender like Eddie, then you're like, hey, I have this already. So I have my down payment. And that's something that we can work with, that we can say, hey, okay, cool. Let's work on finding the house or the homes that we can look at that meet your budget, right? And meet your lifestyle, which a lot of people, they look at the price tag and they think about, hey, well, I can manage a home of this caliber at this price, or at this monthly expense, but they forget about all of their expenses, like things that aren't factored in, my groceries, my gas bill, or all of my softwares that we use today, different apps that you pay for, or television, or any of your luxuries and your liberties that you have. They're not factored in, right? Only you know that, and you can quickly become house poor if you don't identify those and then factor them into your budget, into your plan. So it's always good to be prepared going into that. What are the programs that are out there today for a buyer to even be like, hey, this is my first time buying a house, what do I have available to me? I hear you say something like a 580 or a 620 or whatever my credit score, but what does that do for me when I come to the lender to purchase a house because I haven't done it before?
580, the ground floor for most lenders, meaning that's the lowest score that you're going to find most lenders are going to work with. And when I say that, I mean, while still being able to secure a minimal down payment, right? I can go as low as 500, but typically if you're going below that 580 credit score, your down payment requirement is going to go up. So if I have anything less than a 580 and I want to go FHA, that's typically going to require at least a 10% down payment. Usually, if somebody's got a below a 580 credit score, they may not have 10% to put down. Is it possible? Sure, it happens every now and again. But usually, if that were the case, then they wouldn't have a 580 credit score if they had that much money laying around, right? But yeah, 580 credit score on an FHA program can get you as low as 3.5% down. There are down payment assistance options. Once you get around 620, that's where you see those getting more advantageous, right? More rewarding. And down payment assistance has its pros and cons. There's an old saying that there's no such thing as a free lunch. And 9 out of 10 times, if you have the money for your down payment, you're usually going to be better off using your own money as opposed to a down payment assistance option, because there are going to be some sort of strings attached one way or another, whether it be the time in which you have to stay in that loan. In some cases, the down payment assistance is in the form of a second mortgage. Sometimes that could be what's called a silent second, meaning that it is a lien against the home, but there's no payment required, and then it may drop off after a certain time frame. Or if you were to sell or refinance, you would just have to pay the remaining balance. Yeah. So those are just some things to consider. Does that mean it's not a great option? No. And everybody's situation is different. So if I've got the credit and the income to make a payment on a mortgage and purchase my home, but I don't necessarily have all of the funds for my down payment, a down payment assistance program could be a great option. Usually it's going to be a much better option than renting, especially when you get into the 5 and 10 year time frame comparisons. But if you do have that down payment, I'll usually show people a side-by-side comparison. So I'd say, okay, if we were to bring our down payment to the table, here's what it would look like. And if you were to take this down payment assistance option, and then we look at them side by side and see what's going to be best for their situation. There's many different options, whether it be an FHA, a conventional loan, USDA, which would cater to more rural areas. That can span anywhere from 3.5% down to 0% down. And then, of course, my personal favorite loan option out there is for our veterans, where you have 0% down payment. A VA loan's not going to have any MI. And in the case of having a disability rating, in most major counties in Texas, if you are 100% disabled veteran, you don't even have to worry about property taxes. So I know you and I have personally done a couple loans together with disabled veterans where they got into some beautiful homes and had a fraction of what would normally be ginormous payment, because they had the benefit of a well-earned benefit, because it's not something that just was given. They served and deserved that benefit. They were able to get a very reasonable mortgage payment and not have to worry about property taxes, which can be a big chunk in your housing expense.
1,010%, 1,000%. You to go more of a deeper dive of what those are, what the requirements are, what to look out for, how do you apply for them. I think that's
Yes.
good stuff for people to know, especially as the market is seemingly taking a turn. At least that's what the verbiage and the jargon is when you see the people on the news or you're hearing things in an article. If you're looking on social media, you follow somebody in particular, you're following what the Fed is going, what's going on with the Fed, then you're starting to hear chatter that there is a possibility that rates can be brought down, which is going to impact the market, right? It's
Yes.
going to impact maybe more buyers being a little bit more prone to get into the market because now their mortgage will be a lot cheaper, presumably. Markets like Houston, that might not necessarily be the case because supply and demand. If interest rates go down, which we saw before when we had COVID, then house prices went up. And that
Mm.
could be something that happens. Knowing what your ability, your budget is, knowing what you can stomach, knowing that if you have the ability to buy right now, we can't tell what tomorrow has. We can assume, we can look at indicators, we can hear and listen to smart people, which I think is good, but also always keeping a beat on what is available out there to me now. What resources do I have? Who's going to give me the most to help me close? Do I have bargaining power in this market because it's a buyer's market? Those things are what matter so that you can make an honest and truthful decision and be confident about it when you're going to purchase a home. There are a few more buyers getting in the market. Eddie, maybe you can shed some light on where do you see interest rates at currently, and if you have any insight on where you think they're going.
You actually just touched on a very good point. And I get this all the time, especially when the meetings are getting into the news headlines about the Fed. Oh, they're meeting or they're going to lower interest rates. Something that a lot of people don't understand or have a tendency to misconstrue is that although the Fed's decision as to whether or not to lower interest rates does somewhat influence what happens with mortgage rates, it's not a direct correlation. And more times than not, mortgage rates are actually lowered or raised based on anticipation of what the Fed is going to do rather than a reaction to what the Fed has done. What I
Correct.
mean by that is right now, for example, we are running a 90 bip discount on refinances where if you're to refinance your existing mortgage, our pricing is currently 0.9% lower on the pricing for that rate than most of our competitors. Now, that is done in anticipation to what those lenders believe the Fed is going to do in the future. You mentioned headlines about a Fed drop in rates looming and another, I believe it was 3 to 4 drops over the course of the next year.
Mm-hmm.
So just like the stock market reacts to certain news,
Yep.
it's the news, the anticipation of what they think is going to happen, as opposed to a reaction to what has happened. So many different things will influence how rates rise and fall, but specifically when it comes to the Fed funds rate, it's important that everybody understands that because it never fails. Every so often when you get news, oh, the Fed just cut rates by 0.5%, my phone will be ringing off the hook. Well, rates are better now, right? Well, actually, no. In some cases, they went up because rates dropped 3-4 weeks before that happened because of the anticipation. It was already packed into the pricing. That makes sense?
Right.
And I use our current discount on refinances as a perfect example of that. So anybody looking to refinance, if you purchased your home in the last 3 to 4 years, we may want to look into that to see if we can save you on your payment. It's important that you connect with a mortgage broker that can price you out and show you, okay, here's the current market. So as opposed to following a headline that you might have seen on CNN and MSNBC or Fox News, you're actually getting real-time pricing and you know what's happening in the market. Very, very important that you don't always listen to the doom and gloom of the headlines, but you get actual real data.
Yeah. Being able to talk to real people, being able to speak to the realtor, your local realtor, being able to speak to a broker, a mortgage broker, asking real questions as what's going on and how it affects you in your market is what's key, and it's what's going to give you traction in the right direction to you making a decision if you're going to get in the market or if you're not, or if you're going to put your house on the market if you're not, because it affects both sides, right?
Yeah.
It affects if there's no buyers in the market and there's houses are flooding the market 9 times out of 10, you're going to get very few showings, and you're going to bring that house price down.
Yeah.
To where you thought you were going to get. And that's what we've been experiencing. There's just so much inventory. It works both ways on being able to talk to somebody who can help you navigate what is going on in your current market or the market in which you're looking to purchase or sell a home, so that you are well informed. Today, that's all that we have. We look forward to having conversations, because a lot of people don't know if it's attainable. A lot of people have questions. A lot of people have concerns. A lot of people don't know what to do or who to call. And we want to make sure that we are creating value in the space of real estate, so that we make homeownership a reality for people, and we help you in situations that you may need help in. So, Eddie, you got any last words before we get off?
Thanks again for allowing me to be a part of this. I love being able to not only talk with you about what's going on in the market, but also share our experiences and hopefully help those out there that are looking to achieve a small piece of the American dream and owning a home. We're going to post our contact information below. If you guys have any questions, feel free to reach out to either Cory or myself. Comment below. Let us know what you would like to see us cover. We want to make sure that we are providing valuable information and helping you move forward, whether it be with us or anyone, so long as you do achieve a piece of that American dream and owning a home.
1000%. Thank y'all for listening. And until next time, talk to y'all soon. Peace.